Hello everyone and welcome to GMT Partner video channel where you can find some interesting videos related to trading and investing on the global financial markets. The topic of today's video is long-term trading strategy called weekly envelope. As promised in my last video, I share the strategy with the subscribers of my video channel and hope that this topic will be interesting and useful for both beginners and advanced traders.
So, here's the plan of my presentation today. In this video, I will tell you about the rules of my trading strategy, money management technique, its performance, and some other aspects of the long-term trading. In order to create your own trading strategy, you must answer a few simple questions. All these questions are listed on the slide below. Number 1. What financial instruments is the trading strategy going to deal with? Number 2. What analytical methods is the trading strategy going to be based on? Number 3. What is the concept of the trading strategy? Or in other words, how is the trader going to get an advantage over the other market players? Number 4. What time frames are going to be used by the trader in order to analyze the current market situation? Number 5. What analytical tools are going to be used by the trader in order to make decisions related to buying or selling a particular financial instrument? Number 6. Trader should clearly define all rules and conditions, upon the occurrence of which a long or a short position is opened and closed. Number 7. Trader should also clearly define the rules for calculating the volume of the position in each transaction. The last but not the least important thing the trader should pay attention to while creating his own trading strategy is a strategy performance, or in other words, all necessary statistical information collected during strategy backtesting on historical data and in the process of real-time trading. So, now, using the weekly envelope trading strategy as an example, I am going to answer all above questions. As I mentioned before, the weekly envelope trading strategy was developed in late 2010, and was originally designed for trading currencies. Currently, in addition to the instruments of the Forex market, this strategy is also used for trading futures contracts and stocks. Basically, using this strategy you can trade any financial instrument with a good level of liquidity and sufficient volatility. In addition to the Forex market instruments, I can recommend the following instruments of commodity and stock market: gold and platinum, Brent and WTI crude oil, copper and aluminum, soybeans and wheat, US and German government bonds, stock market indices such as Dow Jones Industrial, S&P 500, Nikkei 225, Hang Seng, as well as individual stocks such as Apple, IBM, Google and others. As for the methods of analysis, the weekly envelope trading strategy does not use fundamental and quantitative analysis. All decisions related to buying or selling a particular financial instrument are based solely on technical analysis tools. Only a few simple and reliable technical indicators constitute the basis of the whole trading strategy. All my strategies that I use for trading in the markets are purely technical strategies. Of course, I monitor and analyze the market situation in terms of the fundamental analysis, but I never use fundamental factors for opening and closing my positions. If you want, you always can add some rules based on the factors of the fundamental analysis to the strategy. However, in my opinion, such approach is quite subjective. The point is that the market simultaneously experiences the impact from many different fundamental factors, and all of them quite often very contradictory. The main problem is how to interpret this conflicting information. The second problem is that the focus of market participants constantly shifts from one factor to another. So, in a timely manner determine to what factors has the attention of the public shifted today is quite difficult. This is why I prefer using technical factors to make investment decisions. The weekly envelope trading strategy belongs to the first type of strategies in my own classification. It is a strategy that follows the market trend. In my opinion, it is much easier to make money in case the market has formed a strong trend. Thus, in accordance with the rules of the weekly envelope trading strategy, in case the market has formed an uptrend, trader is only allowed to open long positions. Accordingly, in case the market has formed a downtrend, trader is only allowed to open short positions. Finally, if the market stays in consolidation, then trader is not allowed to open any positions at all. For the purpose of analyzing the current market situation and determining the market entry and exit points, the weekly envelope trading strategy uses two different time frames, daily and weekly. These two are the basic time frames used in the strategy. However, sometimes hourly charts are used as well. Smaller time frames are needed for opening a position in more accurate manner, thus reducing the financial risk of the transaction. As for the analytical tools, here, as you can see from its name, the basis of the strategy is a technical indicator called envelope. As you may know, envelope is a technical indicator that consists of two moving averages, which form the top and the bottom of the range of price fluctuations. The envelope is used by investors and traders in order to determine overbought and oversold markets, as well as to identify the boundaries of the trading range in a period of consolidation. When building on the chart, the envelope is applied directly to the price graph of the instrument or another technical indicator. As well as in all my other trading strategies, a proprietary technical indicator, called average daily volatility, or ADV for short, is used in the weekly envelope trading strategy. This indicator is used to determine the average value of daily volatility in the instrument. Or in other words, it helps to determine the average range of price fluctuations of the particular financial instrument during a single trading day. In addition, the ADV indicator is also used to plot the lines of the envelope, which constitute the basis of this strategy. The central, or the basic line of the envelope, is the exponential moving average with the parameter of 13-time interval, and the upper and lower lines of the envelope are shifted from the center line up and down, by an amount equal to 100% of ADV. Here is how the weekly envelope trading strategy looks on the screen. In front of you are the weekly chart of the currency pair British pound versus US dollar and the only technical indicator, envelope, consisting of 3 lines. It should be noted that the analytical platform that I use in this case allows building the price graph of 2 different time frames in one window. Here, you can see the candlestick chart, built on the daily time frame, as well as the shadow candles chart, built on the weekly time frame. In case you use MT4 platform, it is better to build 2 separate chart windows. As I mentioned above, the weekly envelope trading strategy is a long-term strategy. The goal of this strategy is to profit from long-term market movements that can last from 1 or 2 weeks up to several months. Trading in accordance with the rules of the weekly envelope trading strategy, on average, will get you about 5 to 10 transactions on each financial instrument within 1 year.